So let's go ahead and get started. So welcome everybody to another Trade Lab case study video. Today we're going to be talking and focusing on Palantir. This made an amazing move from an IPO base, which we'll be talking about back in 2020. And then, of course, as likely you're aware, unless you've been under a rock, in 2023 through 2025, we've made about a 2,000% move. There's been tradable spots along the way. There was a lot of chop in the middle of this trend that unless you're a longer term holder, really focusing on weekly charts, like the maestro Nick Schmidt, you probably had a tough time if you're more of a shorter term holder, swing trader, position trader even. There are a lot of gap ups, a lot of gap downs, but we're going to kind of talk through it all and focus on a few areas where I think the best opportunities were. And very importantly, think about what can we learn from analyzing this stock that we can apply to future trades, future opportunities. So we're going to talk larger concepts as well. This is a lot of analysis in hindsight, but there's very important lessons that we can take away to find, identify, and trade future model book stocks in the future from analyzing Palantir. So looking forward to this one. Hopefully you guys are as well. And let's go ahead and dive right in. So here are the key goals of the webinar. I touched on these a little bit just a minute ago, but first we'll focus on the Palantir IPO base move, about 200% in I think under a month, pretty much. I think it was almost 15 days. Then we'll discuss the larger move, the longer duration move. That was the 2,000% move from 2023 to 2025. Starting with our earnings gap up, we'll focus on that setup in detail. Then, throughout the way, as I mentioned, we'll focus on setups, entry points, risk management, position management as well. And we'll kind of bring everything together and build a blueprint to catch future market leaders. So a few housekeeping items. This is being recorded and we'll archive it on the site once it's done. If you have any questions throughout, and please ask questions, interact in the chat. I want this to be as interactive as possible. I don't want to just be up here talking to myself. So if you have any questions, leave them in the Q&A section down below. Or you can, message everybody else in the chat here. If you, notice something that I maybe left out, or just some, key takeaway from yourself, please share it in the chat. That's the best way we can all, get the most out of this experience. So good to see everybody, and hope to see a lot of messages in the chat and questions coming through in the Q&A. And just a quick thing before we get started, Robert asks, I noticed you do not use the D-View volume colorful one. Why not? I like to keep my charts a little bit, boring is maybe the easy way to say it. I just want to focus on how price is building, price structure. Big volume is certainly a part of, my process, but I can see it visually. The colors in our indicator can be very helpful, but, I'm able to, focus and use the typical one just a little bit better. That's kind of my personal preference. All right. So let's go ahead and dive right in. So let's get going. Here's the agenda. First, we'll talk about visualizing the full move, discussing the 3 opportunity zones as a concept from the Trader's Handbook that applies well to Palantir. Then we'll talk about, as I mentioned, the IPO base move in 2020, and then the move that really took hold in 2024, but started in 2023 and has progressed into 2025, starting from that earnings gap. We'll talk about some key lessons and key concepts and takeaways from Palantir, and discuss, TML characteristics in general. So let's go ahead and dive right in. All right, here we go. So first, here is a weekly chart of Palantir going all the way back to its IPO, all the way to current price action up to date as of today, at around 3 p.m. I updated this chart. So this is a full move. Here is the IPO move that we're going to talk about in detail. Then it progressed and declined below the moving averages, as many IPOs do. After an initial run, they consolidate, they pull back, and then once they kind of prove themselves to institutions, and institutions decide, there's something here, they're showing the growth, they're proving themselves to the market, they start to build positions, and that often leads to a longer duration move that can last, quite some time. This template plays out again and again, and we'll talk about this transition and some of the key signs to notice here that indicated that it had a lot of potential. Not necessarily something that you could say we're going to predict this is going to be a 2,000% move, but a lot of the key signs that were going on at this time about why it was a special opportunity. So we'll talk about that, then discuss a few steps along the way here, and then really focus in on recent price action. And this will be a lot of fun. So let's go ahead and dive right in. First, I want to start with an important concept that I think applies really well to Palantir, but can help you with many other trades. So this is the 3 opportunity zones concept from the Trader's Handbook, our book that we released prior this year. And basically, it's 3 areas, 3 zones within a stock's life cycle that you really want to focus on a high potential name. And that's because these are time periods, these are points in a stock's life cycle where they can make a tremendous move in a short amount of time. And this builds off the work of William O'Neill. It builds off the work of Kathy Donnelly, Eve Bobach, the Lifecycle Trade crew, builds off the work of Mike Webster with the IPO bases. This isn't necessarily a new concept individually, but in aggregate, focusing on these 3 zones is kind of what we want to present in the book. So basically, the first zone where you can have a nice move in a short amount of time is the IPO boom zone. And this could be shortly after the IPO, maybe it forms an IPO base or just runs right away, and basically has an accelerated move. And stocks can move hundreds of % just in the short IPO boom phase, but it's more of a fast-lived time period. And after the boom phase comes a bust phase, typically, where stocks will draw down significantly, sometimes giving all of that move back, sometimes giving back less so, but basically there's a longer duration period where the stock is consolidating, forming its first major base, and it's best left alone. And that's why we like to use faster sell signals and more swing trading mindset during this zone right here. The next opportunity zone happens, as a stock forms a tradable base within this institutional due diligence phase, within this longer term duration down phase. And it often lines up with when the stock is proving itself to the market. It's maybe posted its first quarter of profitability. It's showing game-changing innovations, and there's a lot of positive momentum going for it. And it looks at institutions like it's a good thing to invest in and start building a position in. And this can start a turn and start of a longer term move, like we saw here with there's a weekly chart of CrowdStrike, by the way, and it had a really nice textbook move from its growth transition zone. After that phase, it's not to say that a stock doesn't have momentum, but really the new momentum and best opportunities come after a stock is already mature, when the market and the stock itself go through longer term downtrends and basically start to move up the right hand side from a bear market, or in the very short term from a intermediate term correction in the market. So that's what we call new momentum zones. These occur after the market maybe has been in a bear market, maybe the individual stock has been neglected for quite some time and is maybe a turnaround, and is showing positive momentum again in earnings and sales. Maybe that slowed down during this period and is picking back up during this period. And then once we're out of this, it doesn't have to be a bear market. Just an intermediate term correction can start a new momentum zone, and we'll see that with Palantir later on. So those are the 3 opportunity zones as kind of a high level concept. Here's an example, Zim. This is a daily chart now of its IPO boom zone. It had several IPO short mini bases during this period, and after it rolled over, it really broke down hard, which is what they do. And typically, once we break below the 50 SMA and really start to trend below that, below declining 50 SMA, that's when this IPO boom phase ends and the IPO bust phase begins. Growth transition zone, here's CrowdStrike again zoomed in. Again, we had a little bit of a short-term IPO boom phase. We had the IPO bust phase. Then we get a key line of resistance here, a base within this overall consolidation. This lines up with the 2020 market correction, the market bottom, and that starts the turn here to the nice mature trend that we saw on 2 slides ago. New momentum zone here is NVIDIA. This is basically after, of course, the 2022 bear market. It formed an inverse head and shoulders, but you don't have to put labels on things. Just look at the price action. We formed a new low, moved higher, formed a higher low, and then, started and broke through a line of resistance. And that started, its own amazing 1,000% plus move that it's been on. So this is an example of a new momentum zone after a significant bear market. Again, even after intermediate term corrections, we get kind of a new momentum zone where prior leaders will, resurge after a proper base, and new leaders will likely emerge as well, giving opportunities as they move at the right-hand side of bases and break out. So those are the 3 zones. Again, new momentum zone, growth transition zone, and the IPO boom zone. So looking back at Palantir's move, it had a really nice move during its IPO boom phase. It had a very serious IPO bust phase where it undercut even this IPO base and gave back hundreds of percent of its move here, and it had to consolidate again. Then it formed a stage one in terms of stage analysis and broke out and started a nice move. And this is both a new momentum zone as well as a growth transition zone, because this is actually the earnings report where it reported the first quarter of GAAP profitability, but it lines up with the market also coming off the bear market low. So in this case, the new momentum zone and growth transition zone happened right together. And I do want to point this out, and we'll talk about price and volume characteristics throughout today, but look at the volume coming in after this earnings gap and move higher. Again, this is a weekly chart. We'll zoom in on a daily, but look at the walls of volume coming in. Huge volume compared to what was happening during this entire drawdown consolidation phase. That really shows you, and that's the institutions showing their accumulation in the volume here. And this is the start of that 2,000% move. So again, we'll kind of break this webinar down into two different phases. Move one, which is the IPO boom phase, and then move two is the longer duration trend that we saw right here. All right. So here is me pointing out that new momentum zones can happen after market corrections as well. On the bottom here, we've got the Qs. On the top here, we've got Palantir. This is that same new momentum zone earnings gap that we saw right here. It coincided with the market starting to move higher and pushing out. And then we've seen several other corrections after which Palantir had a nice move during each of them. So, individual stocks and growth stock leaders are kind of going to move as a scalar multiple of what the market's doing. When the market is good, we're in a strong uptrend, they're going to excel. And similarly, during a market downtrend, they're going to sell off maybe a little bit harder than the market, maybe less if they're really holding up well. But everything is impacted by the market trend is kind of what I'm trying to say here. So don't forget that the best opportunities come when the market is starting a new uptrend after a consolidation period. That's the best time to be trading breakouts, earnings gaps, and momentum growth stocks when the market is making a turn and starting an uptrend and gaining speed, gaining strength. So I just want to mention that there. All right. So let's get into move one. Actually, let me see if there's any questions. If there's any questions related to each section, please drop in the Q&A, not just the chat. It's going to get lost down there. But yeah, let's see if there's any questions here. Yes, this is being recorded. Yeah, let me go over my moving averages. So on a weekly chart, the red line is the 10-week moving average. The black line is the 40-week moving average. And on a daily chart, I'll point those moving averages out once we get to one. But on a weekly chart, there's a weekly chart. You can always see because you look up here, it says 1 week. This red line is the 10-week moving average, and this black line is the 40-week moving average. All right. So let's dive into move one. Again, this is the IPO base range breakout, and the driver was a market bottom, as we'll talk about, an intermediate term market bottom, and a hot IPOs. This was a theme during that point. All right, so here is a chart of the Qs on top and Palantir. This is when it IPO. This is a daily chart, both of these, a daily chart of the Qs and daily chart of Palantir down here. This is lined up in time. So basically the IPO date was September 30th. This is September 30th on the Qs as well. So you can see how the price action of the Qs is impacting Palantir's move as well. And this is IPO base. We'll zoom in and really go into detail through each of these moves during the day. But I really wanted to show here is that Palantir took off right after, I believe, the 2020 election, November 4th, November 5th, things really got going. This was this reclaim of the 21 EMA, and that's when Palantir really exploded higher. And again, this is a 200% move in just about 15 days, less than a month here. It set up a new base and set up a tradable swing trade up here. But the meat of the move was actually in the first few weeks of this market uptrend. So when the market is reclaiming the 21 EMA, this is a golden nugget here. When the market is reclaiming a 21 EMA, look for stocks that have formed proper bases and are breaking out and are a little bit ahead of schedule and have the qualities of market leaders, because those names are likely going to keep trending and keep moving higher if the market trend is really going to take hold. And that's exactly what Palantir did here. But I just want to point out that this breakout coincided with strength in the market after a consolidation corrective period. That's the best time to be trading these type of names. All right, so here is a zoom in of this base right here. It ends with the breakout, the follow through. And what I want to do here is basically walk through almost bar by bar, but not quite this move, to kind of talk through IPO bases and where to draw pivots and buy points and all of this. So an IPO base occurs shortly after a stock comes to market. It's often the first tradable opportunity. And I love IPO bases. They were the concept in general is developed by Mike Webster. They're basically they can create an explosive move in a short amount of time, and that's perfect for swing or intermediate term position traders. So here, Palantir actually started forming its base right on the first day where it came public. You can see the big volume here, and it closes down on the day. But you can see it doesn't really progress much further than this day one low. And that was kind of a tell that says, hey, keep an eye on this name because it's refusing to move lower. After a bar like this with a big close off highs, you'd expect a stock to just sell off completely. But instead, we just kind of oscillate back and forth and don't really undercut this low for very long or by much at all. And you can see we form a range here, tightens, and then we get a powerful bar off these lows. This isn't an IPO base yet. This is a very, it's just 3 days of consolidation. And honestly, I like 2 weeks, 3 weeks of consolidation. That's kind of what I'm looking for in terms of IPO base. So this is a little bit early for me, but it's a good sign to keep an eye on this recent IPO and see if it develops into more tradable pattern. If after this move sideways, it started to push up, that would be kind of enough time for me to start trading it. But just right now, it's just a sign to keep an eye on this name and keep it on my watch list. And I always like to keep recent IPOs on my watch list. We've seen the potential just this year with CoreWeave, with Circle. There's been so many great names, last year and previous years, Reddit, A-Lab. IPOs are new merchandise. And new merchandise hasn't been accumulated by institutions yet. And if they're going to build positions, they need to buy shares. And that can create a powerful move in a short amount of time. And often, their floats are lower typically. So they just have a lot of things going for it in terms of, the recipe for a powerful move. So let's get back to the price action here. So positive move off lows, starts to tighten, but then leaks lower and is just in a short-term downtrend. But again, we're not undercutting this low by a significant amount. In fact, once we kind of get to that level here, we have another powerful bar up. So again, the IPO base is maturing here. And this might even be a spot where you put on some shares looking for it to break through this high. However, we don't get any follow through up. We just kind of draw down a little bit back down towards this low, get another bar that pushes higher. And here is a tell that I really want to focus on. So we get a drift lower. Short-term momentum is the downside. This bar tries to push higher, closes right at lows. So in the chat right now, what would be your expectation? Ignore the right side of this chart. Just thinking about if you saw this chart on your during your screening routine, it closes at lows. What would be your expectation for the next bar? Where's the momentum going? Let me know. Lower. Yep, exactly. A close at lows, especially after a fade like this where it moved up and then pushed lower. Now, this isn't a big bar where it faded all the way down here, but just the concept in general, a fade off highs and then a close at lows, you'd expect it to move lower. Instead, what happens is we get a gap up and hold because we don't close much lower. We don't go much lower than this close and push higher. This is a change in short-term momentum from this gradual downtrend to a potential start of an uptrend. So this would be a spot again where you can start a position anticipating a move up the right-hand side of the base. And we get a nice follow through. The next day is a little bit of a downside reversal, but we don't penetrate too much within this bar. And we get another semi-positive expectation breaker again, close at lows, gap up, hold, good close. And then this bar is really positive. We get a very strong push higher expansion. If you start building your position here, you're definitely in profit here. And the expectation after this bar is higher. And we don't quite push higher immediately. Instead, what we do is consolidate and tighten and have one more pullback, forming a handle within this overall base. And you can call this a VCP. We're tightening, forming higher lows from left to right. Volume is also declining within the base. And then what we do is we pull down, tighten one more time further, have a really tight day, and expand up. So I want to go in detail into this right side here because this is really important. So again, we're seeing the momentum shift to the upside within this base. It's starting to approach highs. That's where you really want to be interested in a name to build a position if you don't already have some, or potentially add some more before it breaks out of the base. And basically, again, the one last handle is the perfect time to do that. So let's walk bar by bar here. So expansion higher, looks strong. Positive day, even though we shook down to the 10 EMA, look where it closes, looks good. Tight day overall. My expectation, without looking at the left here, is actually that it would break out the next day because we're forming a tight range right near highs. So we get a little bit of a negative expectation breaker here. But what does it do? It pulls down to the 21 EMA. And then again, the expectation of this bar, not the best close, would maybe be for it to move lower. But instead, we have a nice tight inside day, and you could start to draw a range here and a buy point right through these highs. It tried to move lower, but instead it held. Again, I'm looking for those short-term momentum changes, and we get a tight range that forms here. I likely would have bought this on this day as it tried to push higher through this high, but it does fade, but doesn't hold, doesn't go too bad. And even when there's a fade from a range breakout, you always want to keep it on your radar in case it goes the next day or goes the day after that. And that's pretty much exactly what happens. We get a really tight inside day here, very tight range relative to all of this. RMV5, which I use for IPOs, which is basically just using a 5 period, goes to 0 during this bar. And then we get the breakout, the really great buy point, the A+ buy point, as it pushes through these highs. That's where you want to be buying, and maybe buying even more through this consolidation pivot, and maybe adding your final piece through this IPO base breakout. And then beautifully the next day, on this day, stop would be at lows. Great close. You're at a nice profit cushion. You could even peel off a third if that's kind of your style. But the next day we get expansion to the upside. So your stop should definitely be at break even, and maybe even trailing at the 10 EMA or now the 21 EMA, which is pretty much at your cost. So that's kind of a walkthrough of the space. I want to pause here to see if there's any questions or key takeaways from you guys, because I think going through this base is a great exercise. Basically, think about each bar, how it kind of adds to the whole tapestry of what's going on with the stock. What's the expectation the next day? What could happen? What is likely to happen? Where would you set your stop if it breaks out the next day? Think about all those things as you're going through this chart. But let me see if there's any questions here as we go. I see, are we going to have an IPO model book for the Trader's Handbook? Yes, I'm currently working on that. Really good question. And Palantir will be in it because it's a great example, as well as Corsair, which we'll talk about in just a minute. Is it a good idea to buy also when the stock went above the 21 EMA? So there's not really the 21 EMA started its history right here. So in a general base, that's typically an area that you'd be looking for an entry. But in this case, we didn't really have a pop through the 21 EMA here. All right, let's see. Any other questions? Oh, good one from Sai. Can you talk about how you draw your pivot lines? It looks like you draw a line from the swing high. That's pretty much it. So what I do to draw my pivots, and this line right here is drawn because this is the close of the IPO day. And in the short term during the IPO base, this is just kind of a reference point where it would be starting to build momentum if it stays above that. If we leak too much below it, it probably needs, a longer period to consolidate. But in general, these pivots right here, I think that's pretty much where you're asking, Sai. I pretty much look for ranges where there's tightness for 1, 2, 3 or more days. And when I identify a range, I see, where is the level that would signify a break above that range? And that's where I draw a line across. And it often lines up with swing highs, like in this case. Here's a little bit more short term. It's within this overall range. But basically, you've got a upside reversal day off the 21 EMA, inside day. That's enough of a range for me to draw a pivot across. And I'm using the inside day high here because it pretty much lines up. These two highs are pretty much the same thing. But if there's an inside day, I draw it at the high there, and we get the breakout here. And another way you could do it, instead of trying to identify ranges on your own, so if you're newer to this, use something like RMV, where it identifies tightness for you. And then once you see RMV goes to 0, look for a key high, 1 bar to the left or 2 bars to the left, and draw it at that high. That's kind of a shortcut that you can use to draw those pivots. So hopefully that explains its SI. Let me know if it doesn't. All right. What intraday charts do you look at when it breaks out of the base? I'll use the 65-minute a lot and the 5-minute on the actual breakout day, but I'm only looking at an intraday chart if it's set up on the daily and weekly chart, and I want to get off the intraday charts as quickly as possible. As long as I've got the execution, it's pushed through the pivot on volume, I'm shifting over to the daily chart and watching to see how it closes that day, and ideally seeing it follow through the next day as well. All right. And guys, please put the questions. I see people putting it in the chat. Please put it in the Q&A section. I'm not always going to see it if it goes in the general chat. All right. So here again is the base that we just analyzed. The IPO base is the breakout, and this is the move after it. So basically, we'll go through this. It showed textbook action. And if you want to see more textbook action, Tesla's kind of doing it right now. It's kind of in this area with regards to a move after a breakout. We've got the breakout here, follow through. Then we have a little bit of a consolidation, all the while holding above a rising 10 and 21 EMA. At this point, the 21 EMA is above your cost, so you could shift your sell signal to a close below that, or even really the 10 EMA, because this is such a powerful move and a powerful stock that the 10 EMA is faster, it's a little bit quicker, and it's going to contain that move a little bit better. So from IPO basis, I do typically use the 10 EMA here. But it does nothing wrong. It just kind of tightens, reconfirms, and then we get 4 powerful days up in a row. And at this point, you're already up, 80%, actually more than 80% at this point, because the breakout was around 11. And here you've already gotten a double, and we're definitely getting short-term extended. So depending on your time frame, you're going to be more or less aggressive with selling into strength. If you're a very short-term trader, you're probably selling the last bits of your portion, your position size into this level, and even intermediate term traders, because with IPO boom moves, you want to just be faster with your sell signals. You're probably looking to sell some here. Then you see a downside reversal. This again is a potential sign of weakness. Sell some there, sell more as it undercuts the downside reversal day. You think you're a fool here because it closes higher, but then we get the gap down, and it basically signals that it needs a whole new base to reset up. So depending on your process, you're selling into strength here, and then selling probably the last bit on this gap down if you're more of a longer term position trader. After this, we form out a new base. This also is constructive. Again, from left to right, we see tightening action. We see volume declining from left to right, and we get a whole new fresh breakout that is a great swing trade opportunity. I think this is up 40-50% in a few days. Again, if you're a fast trader, you're just taking that and moving that capital elsewhere and saying thank you very much. But this is a little bit different character. You can see the very wide range on the follow through day, and this day as well, very wide range. And it just doesn't have the same momentum, and obviously doesn't trend like the previous one did, and ultimately rolls over below the 21 EMA. So, you'd be watching this, and your costs would be down here. As it breaks to 21 EMA, sell some, and definitely be out if you're not already, based on this gap down and 2 closes below the 21 EMA. But this is pretty much the boom phase, boom opportunity. This was the best spot right here. This would be another tradable opportunity here. And you might have gotten some false starts in here. You've got this fade here as it breaks through this pivot, this fade as well. So again, I'm just pointing out the spots where it actually worked. But I want to paint a clear picture that you'd likely have some stop outs along the way if you're trading this pretty aggressively and trying to break through, get those range pivot breakouts. But a great trade and a great move to really study. Okay, so I want to pause here and see if there's any questions. And while you guys are writing those, please drop them in the Q&A section. I do want to point out that, again, thinking bigger picture, Palantir was a promising IPO in a period where the market was coming off a correction. You were in a very strong year, aggressive year for growth style trading, so that was going for it as well. And other IPOs were also doing well. That's always a good tell to see, other IPOs acting well when you're trying to trade them. So this is Corsair. This was going around the same time. We had a strong push off its IPO, another mini IPO base here, range breakout, and really nice trend. And this doesn't look like much, but this was a 77% move. So this was another hot IPO that was going on at the exact same time that Palantir was. So it's always good to see Again, when you're trying to trade IPOs, that the market is strong, other IPOs are working, there's themes that are working in the market. So just want to show Corsair as well. This is another stock worth studying for its IPO move. Since then, it hasn't really done anything, but this IPO move was fantastic. All right, so let's see if there's any questions on this first section here. John asks, is declining volume a buy program? I don't necessarily think it's a buy program, meaning, institutions, having algos and stuff. It's just that there's not a lot of demand at these prices. It's just kind of finding, it's finding, the price, it's finding equilibrium. It's trying to find its spot. And it's basically sellers, a lot of sellers back in this area. We move up, there's more sellers who are trying to get out. And then overall, there's less and less people who are really want to sell in this area. And then people really start wanting to buy, and that kicks off the volume again. So I don't think it's necessarily a buy program, but just it's a nature of supply and demand, and people, being less inclined to make a lot of trades during a base when nothing much is happening. A lot of stuff happens, a lot of volume happens as we undercut bases and break out of bases because, the stocks on everybody's radar, they either want to buy it or they want to sell it, either in greed or either in fear. All right. Let's see here. What is your approach when a stock makes a steep one-day decline that pushes it well below the 21-day moving average? In that situation, do you stay in the trade and wait for confirmation on day two, or do you prefer to exit right away? Jerry, really good question. It all depends on the situation and my cushion, especially. If I'm up 40% in a position and there's one-day decline, yes, it's breaking below the 21 EMA, but I want to give it the benefit of the doubt, especially if everything else, is still looking okay. The market, my other portfolio, I just want to see how that news kind of plays out. That likely hit the stock. But if I'm up, only 5% and a stock has a big one-day reversal and is undercutting the 21 EMA, I'm out. I don't want to mess with it when I don't have a cushion. So hopefully that helps. It just is kind of a situation by situation basis. My typical sell signal is 2 closes below the 21 EMA. So I want to give it the benefit of the doubt if, it's something I already have a nice trend in, a nice cushion in. So hopefully that helps. Was it Jerry, I think, who asked that question? All right. Stephanie asks, does an IPO have to be profitable for you to buy it? No, it does not. It just has to set up technically, but ideally it's got at least revenue growth and a theme going through it. And this had the hot IPO theme, and I think had a lot of revenue growth as well. Right during this period, this downside reversal, it reported 52% year-over-year revenue growth and raised guidance. So those are two fundamental things going for it during that period. All right, so let's keep moving. We've got a lot more to cover here. So let's talk about move 2, the 2,000% move in 2 years. The main setups are earnings gaps and base breakouts here. The driver was the bear market bottom and then also AI profitability. So we'll touch on those as well as we go through it. So again, here is the larger move here. This is the IPO bust phase. And then this is the stage 1. And then this is the first area that we're really going to be focusing on it, the start of this 2,000% move. You can see technically we had the earnings gap here, start of the stage 2 uptrend. It held the 40-week multiple times on these pullbacks. And we had a potential climax top that ultimately resolved, and it's moved higher since. So this is kind of the bigger picture that we'll come back to a little bit each time, kind of showing which section of this chart we'll be focusing on. But in the meantime, we'll be starting with this one right here. All right, and this is again just showing a little bit of some of the fundamental catalysts that go along with that weekly chart. So here we have first gap profitability. They announced their AI platform revenue beat. They announced a share buyback program that took effect, I think, primarily in 2024. You've got their AI platform convention here, S&P 500 inclusion. So these are a few kind of fundamental catalysts that drove this overall move, because stocks don't go up 2,000% without something really happening behind the scenes fundamentally, or something else. We've seen some meme stocks go up crazy amounts, but a more growth stock, mature name like this, it needs fundamental drivers to make this type of move, and these are the examples of those drivers for Palantir. All right, let me get a sip of water here. All right, so here we are on a daily chart in this area right here. So again, context, We had a longer term downtrend. We're now in a stage one and looking to break out into a stage two. So here is that same basing period. This is the stage one here on the left. And then this is the earnings gap that really kicked everything off. So this is the earnings gap and the start of the power trend here. So here's the earnings gap. We push higher immediately, run into that weekly resistance level. This is the big weekly level here. Pull back, form a post gap range breakout where we form a tight area after a gap up. And that's kind of my focus for when to get in. I trade day one, day two, but I love it when there's a tight area that forms after the gap up and you can manage risk nicely and get a nice short-term move that leads into a longer-term move. And we get a really nice tight day. I'll go in detail into this in just a minute. A breakout of the larger weekly base, and then I think about an 80 to 90% move from these levels until we start a new base, break that 10 EMA. So we'll go through this in detail. But first, I want to talk about the gap up and the range that formed after it, and some key price and volume nuances here to keep an eye out for. So here, again, is a 65-minute time frame that's blowing up this portion right here. So again, we're blowing up this portion right here. So here is the earnings gap. We push higher, and then it starts to consolidate and form a mini base, a post-gap range breakout. And this is the really key thing I want you to key in on here, is within this gradual move down, we get a gap down at the open that holds. So again, what's your expectation on a gap down? That it's probably going to move lower. Instead, they bid the stock up, institutions are accumulating shares, and we move higher and hold. And then even the next day, which is a really tight day overall, when we go back to the daily chart, you'll see we get a slight gap down on the open, and then institutions just gobble up those shares. Any shares that come to market, they gobble them up and just form this really tight area. Look how tight this is within this range here. And it's really clear this is the short-term pivot you'd be watching. And then the next day is the time to buy on the range breakout. A stop loss would be set, 95, really 99% of my stops when I buy a range breakout are at the low of that day. And that was about 2.5% risk. You could easily take a 10 to 20% position using that risk and keeping your overall portfolio risk well in check. And you're off to the races. We have a strong close on day one, which is the best sign that you're going to have a good trade. And even better, the next day, we have strong expansion as we break through the weekly level. This is why finding those ranges a little bit early allow you to manage risk better and just get a cushion right away. Because instead of trying to buy this day and really chasing and experiencing FOMO, you're buying expansion from this contraction, and you can set your stop really tight. And if it breaks down, you're out with a very small loss, and you can try it again. But when you're right, it just works right away and works beautifully here. But again, the key thing to look at here is this gap down that gets bought up, gap down that gets bought up, very tight action, forms this range, and that's how you identify the buy point. So if we go back to the daily chart here, and let me see if I can actually zoom in here. There we go. This was the gap down that got bought up. Nice upside reversal off the 10 EMA area. This would be your sign. If you're doing your screening, you see the strength on the recent earnings gap up. You see the pullback. You see the big upside reversal. The short-term momentum potentially shifting. You got to put it on your watch list. You got to put it on your focus list if you see that happen. Then the next day, again, slight gap up, but very tight day, very tight range overall. So if it's not on your watch list before, it's got to be. And you could screen for these with RMV. You could just look for it manually, but you're looking for this tightness after this show of power. And you see your buy point through these highs. The next day, we push higher and break through that level. That's when you're buying. Get a strong close right at that weekly level. Your stop is at low of the day. And then we expand higher. You can move your stop up to a little bit over break even, trail it at the 10 EMA, trail it at the 21 EMA. The best thing with cushion is you get options after you've got cushion about how you want to handle a position, sell more into strength, sell more into weakness, where you want to put your stop. But getting the entry right is kind of your best defense. Because again, if this failed and rolled over, you had a very, very tight small loss and nothing to worry about. You can try it again if it resets again. But this subtle clue of the gap down that gets bought up, gap down that gets bought up, very tight day. This is what primes this overall setup, this very tight day. And we get expansion from this tightness after the show of power. And what really made this setup explosive is that all of this was occurring near a big weekly level. In a stock that was changing its character because it announced profitability, that completely shifts how institutions view it, value it, model it, and they have to buy shares if they're a growth, growth centered fund. They see a new opportunity. They have to go out and buy shares, and that accumulation is what buys up those gap downs, what keeps it tight, and then what accelerates that move as we push out there. They're running over each other trying to get all those shares, and that leads to a really nice trend. We get a downside reversal here. That would be a sign to sell some. Otherwise, it hasn't broken the 10 EMA. Then for aggressive traders, you'd be out on a break below the 21 EMA. And you've also got a expectation breaker, fade off highs after you thought it would break out here. That would be another subtle early warning sign, and then we fall through to the downside. You're out of your position with a really nice trade in Palantir. Now, of course, if you're a longer term holder, we haven't broken the 50. We haven't broken, we haven't given back too much. If you're a longer term position trader or investor, this entry is still excellent. Probably you bought some on the gap up. You bought more as it pushes higher. You bought more. And you're just waiting for a significant change in character, for it to really break down. You're looking at the longer term moving averages, the 50 SMA, maybe putting your stop loss there, and you're trying to play the big move. These sell signals on the break of the 10 EMA, the downside reversal, that's more for aggressive swing traders, but the entry is the same, but you would handle your selling differently because this is just starting a stage 2 uptrend here. All right. And speaking of this tight day here, this is another key thing to think about, and a thing to really look for within bases that you're watching is priming days. This tight day is a priming day. It primes the setup to be ready for short-term momentum, short-term expansion that we can enter and use to build a cushion quickly. That's our goal as traders. And these are kind of 4 different priming patterns. You've got an inside day, inside bars, upside reversals, positive expectation breakers, and then a tight day like we just saw. And all of these are basically a potential trend change in terms of the short-term momentum. And even more than that, they give you a really nice logical spot to manage risk against. If we break through this high, stop at the low of the inside bar or on the day it actually breaks through. If we fall through up from this upside reversal, we break through, stop at the low of the day, or if it's tight enough, stop at this low right here. If it breaks those lows, the short-term momentum change is invalidated and we're breaking down further. So that's why these priming patterns work, is because they indicate that short-term momentum change that we can use to kind of get that cushion right away and ride that and hopefully break through further pivots and really start trends. Positive expectation breaker. We've gone through this concept a little bit. Bad bar closing at lows. Expectation is fall through to the downside. Instead, we start a short-term up move. And that would be a spot to maybe even start your position, on that gap up and it holds and pushes higher, start it. And then as we break through these highs, add more, stop here or at the low of the day. And then the last one that we actually have an example with Palantir here, we get a very tight day, very tight range day from high to low, tight, open, and close here. And from this, we can get expansion, set your stop here or at the low of the breakout day. So these priming patterns, again, I don't want you to memorize them. I want you to think about what's going on behind the scenes. What do these indicate? So again, these are changes in short-term momentum, and they allow you to manage risk tightly and logically. It's not just about, oh, this is inside bar, I memorize that's good. Think about why it's good. What does it do for you as a trader? How does it allow you to manage risk better? How does it allow for a more explosive move coming out of it? That's what you want to be thinking about. Don't just memorize these. Try to think about what's going on behind the scenes in terms of supply and demand, whether the stock is changing momentum in the short term, showing strength, showing weakness, all of that. What's the expectation for the next bar after a pattern? That's what you want to kind of build that anticipative feel for. If it works, awesome. If it doesn't work, that's information as well. So that's why it's beneficial to learn these patterns, but not just learn them, not just memorize them, understand them. All right. So again, here is this trend here. This is the tight day expansion. This is the buy point. And you're, depending on your time frame, you're selling a little bit here, and getting out of it here. And definitely as it breaks the 21 EMA, still for, I think it would be about a 60% trade. So this would be a fantastic move here. And this was a great opportunity. All right. So that was this section here. I want to pause here and see if there's any questions, because I think this is probably the most key part of today's webinar is going through that setup. That's why I spent so much time on it. We'll go a little bit quicker through the next opportunities, but let me see if there's any questions here. All right. Okay, cool, Ron. Yeah. How do you factor volume into your narrative? Big volume often seems to be exhaustion and reversal, so I look at continuation of reaction after the big volume. Big volume, it depends when it comes in. Early in a trend, when a stock is basing and it starts breaking out on big volume, that's just the start of the move. But there's big volume at the start of moves and when we get more stretched as things get whippier, all of that. So big volume, it depends where it happens. If it's at the start of a trend, when we're the first gap up, we're the first breakout, that's an A+ thing. If we've already been trending for weeks and months and are getting extended and whippier, and there's big volume coming in, that's more of a sign of exhaustion. So it depends where the volume comes in. But good question, Andy. Cool. So let's push on here. So again, we focused on this area here, this kind of first trade, and then we'll kind of step by step through this trend all the way up into recent times. Let me get a quick vibe check. How you guys doing? You guys enjoying this? Are you getting value of this? Let me get a quick show of hands if you guys are enjoying this, or let me know if I should go deeper, slower. Give me some feedback, guys. Let me know. All right, I see some thumbs up. Cool. Okay, good. All right, we'll keep going. And yeah, if you guys notice something that I didn't mention, if you notice something in a price and volume characteristic that I didn't show, for instance, RMV went close to 0 here right before the breakout, put it in the chat. I want this to be interactive, guys. So, and that's the best way to study this, is to do it on your own time. So again, after you watch this webinar, go with a fresh set of eyes and go to a weekly chart, go to a daily chart, and probably you're going to notice, 5, 10, maybe 20 things that I missed or didn't point out today. And that will teach you something that you'll be able to use and look for in your routines and all of that. So that's the best way to get the most out of this exercise. All right. So again, we focused on this area, which is right here. Now we're moving up to where this square is. We get a slight move up and then more consolidation. So there's not much to cover here. Honestly, this period here, until around here, Palantir moved up and almost doubled, but I know I personally traded it and didn't have much success during this period. I had a nice trade here, but during this mess, if you're just holding it from this entry, you had no sweat. It just held that longer term moving average. But if you're trying to swing trade it up the right hand side of bases, it was pretty choppy and tough to trade. And we'll kind of see what I'm talking about here. So first of all, this is the top that we just focused on. This is the expectation and fade, break below the 10 EMA. Then we pull back, reclaim, move actually a little bit higher before going into a longer term base and really resetting everything. At this point, you'd be watching for the next move up the right hand side of the base. I'm not going to go through this step by step. In the article, you guys can take your time, and I have additional comments there. But there's not much to cover. We're just kind of going through the cycle and looking for the next opportunity here. So moving on a little bit, again, there's a weekly chart showing what area we'll be looking at. Here is that base that we are showing, and you've got some tradable spots off the bottom here. You've got tight ranges here that pop higher, pull back into the 21 EMA, tight day, range here, breakout, but these don't ultimately go, work and really go for us. And again, like I said, this was choppy in here. I had a lot of scratch trades and I think a few good ones, but overall, it wasn't nearly as clean as this trend right here above the moving averages. And that's what we're really looking for. But we did have that here and here as well. So we'll zoom faster to those points. All right, so moving on here, we have another base. We get another earnings gap, and this was tradable up here. But after this consolidation, range breakout, I bought this, then got stopped. There's not really any progression from it. And this could be because of the market, just because it could just be Palantir getting, maybe there's one big investor that's actually selling into the strength that needs to be, that supply needs to be absorbed. But for whatever reason, this period during the early 2024 was pretty choppy and just kind of a base on top of a base. with no real follow through and no real huge trends. Moving on to this period here, a little bit higher, but still very choppy. We get, again, a base, try to push higher, negative expectation breaker, it holds these base low. Again, the expectation is we break down, we don't, which signifies that a big move could be coming. And this was definitely tradable. It was choppy, but tradable. You've got a key level here that then we get this breakout from this range, push higher, another range right here after it pulls back to 21 EMA and resets. But ultimately we break down below the 21 EMA and you'd be selling it. And we actually break down even further. And this is kind of that big 2024, I believe, late summer correction here, or early summer correction. And this would be big sell signal. And then as we break below the 21 EMA and stagnate, you'd be selling the remainder of your shares, and definitely you're out on this gap down. Then we get this big bar here. And these type of big bars, you can see we gap down huge, close near highs with a big move higher. These are potential base bottoms whenever you see them. Maybe it leaks lower and consolidates more, but often this kind of ends the at least big downside momentum. So always keep an eye out for these. And in this case, we actually gap up and kind of reset immediately. And let's move on because I showed here. So again, this is that big reversal. We gap up. For me, I would have loved one more day here. I didn't trade this. I didn't catch this initial move because there wasn't too much of a range here. It was just a very quick bottom, snap back to the 21 EMA, and reconfirm. But this day would have been actionable. We carry on higher, then we pull back to this prior high. And this would be really where I'm getting interested in. I love pullbacks at 21 EMA, especially when that coincides with a base pivot. And you get a nice pullback, you get a retest, you could accumulate versus this base high versus the 21 EMA. And we don't get a clean range breakout here. We get a gap and go move. So if you didn't buy it here, you kind of be chasing a little bit, and it's tougher to manage risk on these gap ups. But luckily enough, we do reset and form another tight 21 EMA pullback. Again, you're watching for ranges, a range to form, and then a breakout through that high that happens right on this day, and you're off to the races and trending beautifully. And you've got a nice position in a potential leader that is on a nice move. It's got fundamentals going for it. It's got momentum. It's got everything going for it. I love seeing gap ups prior in the trend. That's a sign of power in the stock. So again, look for signs of power, then a setup. Sign of power, then a setup. A spot where you can manage risk and know quickly if you're right or you're wrong. That's pretty much what a setup is at the end of the day. All right, so this is that range breakout here. It keeps trending higher. We have, I believe, earnings here. We get another gap and go. And if you've got it, that's awesome. If you don't have it, maybe you could use some day one entry tactics, but we're a little bit later in the move. So not really an A+ earnings gap setup, but nevertheless, it works and pushes higher. Trends above that 10 EMA, you can see how it kind of respects that level. So that would be kind of the new moving average of record. And that would be what you're using as a sell signal. So here we get a big reversal, sign of distribution. Then we break below the 10 EMA. Here a few times you could sell a little bit more. And then as we finally break below the 21 EMA, it's showing it needs a whole nother base to reset. And that's likely where you're selling your position if you're buying back in here or on the earnings gap and just waiting for it to set up again in a new base. Moving forward, this is that sell on the 21 EMA. It forms a stubby base before earnings again, and basically doesn't give you a great spot before earnings because, here it reclaims the 21 EMA. That could be a spot, but there's not a clear range up the right-hand side where you could position, manage risk, and have enough cushion to go into earnings. Because for me, I need probably at least 10% depending on the implied move of the stock. And for a name like Palantir, definitely a little bit more than that. And if I didn't have that going into it, I would have sold and just looked to play, a post gap range breakout or other setup after the earnings gap if I missed it. This one sets up a very tight day here, reconfirms. But what I want to really focus on here is that this is a gap very extended in the move. We're up almost 2,000%. We've been trending for years. We've got multiple earning gap ups within this move. This is a little bit lower on the risk reward scale than prior gap ups. So that's always something to keep in mind. So you can trade it, but you might want to use a little bit more discretion, maybe lower position size, be quicker to cut it if it's not working, but you could still trade it. And there was a nice trade here through that high. Let me actually zoom in here. So we get the gap up, tight range on a 65-minute time frame. This is very tight, and then you buy through that high, and basically trending. Oops, reversal, nice action. But then we get a potential character change. You can see this huge wide range bar selling off. The market was also deteriorating at this point. I think Reddit was breaking down as well. Other leaders were breaking down. So taking that into context as well, if you're a swing trader, you're definitely out of it on this name, and definitely out of it, the rest of it on this gap down if you didn't sell all of it on this period. And let me go back here. From this point, it keeps dropping, breaks below the 21 EMA. And when we break below the 21 EMA, that's just my sign to say, hey, we need a new base. We need this to reset. And that's kind of what you're waiting for. And we just keep consolidating, keep breaking down. And actually, this screenshot ends at the upside reversal bar that signals the base low in this case. And we'll show the current action in just a minute. But this bar, it should remind you of something. It should remind you of the prior base low bar that we talked about. So when you see these type of bars, again, it doesn't necessarily mean that the base low is in. Palantir could certainly have rallied into the 21 EMA, rolled over further, and start another leg down. But likely for that leg down, the big move down is over. And we just have to kind of see, is there a potential short-term momentum change that starts the bottom of the base? And in this case, that's exactly what happened. All right, let me pause here. Any questions of up to this point before we talk about more current action? Let me see here. All right. Alexander, I've got some webinars completely on relative measured volatility, so I'd highly recommend watching those. And I explain it in detail in those. So just search relative measured volatility and look at the Deep View channel. I've got many videos about that. Cool. All right, I don't see any more questions coming in, so let's move over to current times. So this was the big upside reversal that we talked about. And in this case, it was also the base low. And we get a rally higher, and this starts a new trend. But I actually want to go over to Deep View instead of going over the stagnant chart here. So let's go over to Deep View and talk through this base up to recent price action. So let's go ahead and do that. Let me bring up Palantir. And let's kind of go bar by bar here. Can you guys see my screen? And let's hide that. Let's hide that. You guys can see my screen fine. Let me know in the chat here. All right, yes. Cool. All right. So again, as we break below the 21 EMA, and this black line is the 21 EMA, this faster moving line is the 10 EMA, and this slower moving line is the 50 SMA. You can always tell what moving average it is by how quickly it's reacting to price. And this is the 10, this is the 21, and this is the 50. When we break below the 21 EMA, my mindset is that we need a full new base. We need to absorb any supply coming to market. We're in a period where it's going to be choppier, it's going to be harder to position, and there's not going to be much upside momentum. So that happens here. We start to set up here again. We try to push higher, but the market rolls over again, and Palantir is the same. And we break back below the 21 EMA. And until this reversal extension, I'm not really interested in the name at all. But when this happens, I recognize that this could be the base low. We had an undercut of this key significant low prior, and we could be changing the short-term momentum to the upside. That's exactly what happens. We get a little bit of follow through, but we have a sell-off after the open. We were rejected at that 21 EMA. And often when we get that first push higher into that 21 EMA, we see some selling coming in, and that's what we get here. We get a downside reversal, and this is good. This is actually a great test of the strength of the short-term momentum. If we fall through to the downside, that would say maybe we need more time, but if we hold or move higher, that would say, hey, really focus on Palantir, or even potentially enter as it breaks above the 21 EMA. The next day, we get a pop higher. So again, the strength, the momentum to the upside was reconfirmed, and this would be a potential buy point, a very early buy point, but a potential buy point where you manage risk here. Maybe you're not going full position size because this would be a start of a potential new uptrend. So maybe you're starting with a 5% position and seeing how that does. But we get short-term momentum to the upside, and now we're looking for constructive price and volume action. And what does that look like? It looks like stair steps higher, move up, range building, move up, range building, move up, range building, hopefully with some gaps up, and ideally an eventual test of these previous highs. The next day, we get an inside bar. So in the chat right now, is this a good bar or is this a bad bar? Let me know your thoughts here. After this strong move up, we get an inside bar. What do you guys think? And there will be a quiz at the end, so be ready, guys. Is this a good bar or a bad bar? All right, I see some goods. Yep, I would agree with that. Inside bar after a move up is pretty typical and constructive. It's tight action and showing that there's not much give back after this bar right here. The next day we get another inside bar actually within that, so further tightening. Is this good action or bad action? Let me know in the chat here. What do you guys think? All right, John says very good, nice. Great, nice, good. All right, awesome. And this is all within the context of the normal cycle. We've got a potential base bottom. We've got a move up reclaim of the 21 EMA. And now we're tightening at that level, potentially forming a higher low here or in this area. So yeah, I agree with you guys. This is a good bar. Who's a good bar? There you go, Mark. I feel like you should be doing this this webinar, Mark. Anyway, we get a nice pullback into the moving averages, constructive. On lower volume as well, RMV going to 0, and then we get a gap up. Now this will be an interesting one. What do you guys think about this bar? Good bar or bad bar? This will be interesting seeing your guys' thoughts here. All right, we got some goods. Still good, still good. Okay, yeah, I agree with okay. To me, it's good versus need more information. What the good is that we gapped up and didn't give back too much. The bad is that we sold off the highs and we're up against this level, this key pivot, but I'd say overall a good bar. And you're watching for it to hold here or even reconfirm. And you can even use this high as your buy point, because if we push higher through this level, it reconfirms the short-term momentum. It's kind of like this bar right here. If we push up higher through this high, we're reconfirming the short-term momentum and breaking through a key level. All right, there we go. We held that gap up and pushed higher. This would be a buy point here on this day right here. Managing risk either at this low of the day or this low, or even at the 10 EMA pretty conservatively. You could be building into your position as you're seeing constructive price action. You could be building and adding pieces to your position, maybe starting with a 5%, adding 2.5% there, adding 2.5% there, or you could be buying stuff all at once. But early in a trend, it's kind of tough to get very precise points because things are still volatile. But this could be a spot to add. I'd be comfortable adding 10 to 15% on this bar, saying your stop here. Maybe you get stopped out, maybe you don't. There you go, you get stopped out. So I got stopped out there, took my loss. But is this a good or bad bar, and how's it action overall? Let's see. Let's see what you think. Good. All right. So you got stopped out, but that doesn't ruin the overall chart, right? It doesn't ruin the overall setup. And this level has kind of been reconfirmed as a key level to watch. This high is right near there. We reject down, but then push off the lows. So I'd say a good bar, overall tightening, and I'd be watching for a spot to get back in. All right, good bar or bad bar, guys? Mark, I like my tight stops. It works. It works when it works. Yeah, good bar inside day here. Set your stop at low. If it pushes higher, get stopped out again. But overall, what's it doing? It's forming a handle within this period. So let's move one bar further. I ruined it. I showed what happened. When you get inside bar here. So overall, what have we done? We've pushed strongly off the lows, and we formed a tight range back into the 21 EMA. So overall, very constructive action, and be watching for a breakout through these highs, through this level as well. Now in this case, we get a gap up. So it's tough because you weren't able to buy your typical range breakout. It's hard to manage risk, but I'd be willing to add more position here, especially early in a trend. You saw the strength off lows. It held the 40-week, 200-day moving average. There's everything going for it. AI, that theme, all of that. And we gapping up above a key level. And basically, I'd be managing my risk versus the 10 EMA here. Start to build into my position. Then we reconfirm. You can add through that high. And we're really starting to push out and push up the right-hand side of the space. Let me zoom out to show that base. You can see we're starting to move up the right-hand side towards this level. And from this point on, we're starting to move up, and I'd be watching for stair step action. Again, push up, move lower, push up, move lower, reconfirming as we go. So let's zoom forward until this point right here. We're trending above the moving averages. We're approaching this pivot. And this is going to be a spot where you could expect some volatility. We've run strongly. This is about a, what is that? A 25% move in a matter of days. And we're also running into earnings. Earnings are upcoming. So depending on your situation, if you're a swing trader, you're likely taking some off into strength. You're expecting volatility in this area, especially on earnings. It could gap up 10%. It could gap down 10%. It could gap down 20%. So you just got to manage your position based on your cushion and what's going on in the market. Here we get a gap down on earnings. So again, if you bought in this area, you still have some cushion, but maybe you sell a little bit more or half, depending on your sell rules, right? We haven't penetrated the 21 EMA, but we are below that 10 EMA. So if you're a swing trader, you're just taking your profits, whatever you've got left, and probably moving on to the next opportunity. But if you're more of a position trader, you've built into the position over time, you've got a cushion, and you're watching to see how it acts after this gap down. And what do? Inside bar. So nothing, no leak lower, holding this low, holding the 21 EMA. Good sign for me. And even a potential buy point through this high here if it reconfirms higher. And that's what happens. You could add back a little bit more, maybe half, or penetrating this gap. And we're back in a strong position here and expecting it to continue to trend. We've got earnings out of the way, so there's kind of less news risk around the name. And you just be watching your cushion and watching based on your sell rules, whether that's 2 closes below the 21 EMA, 1 close below the 21 EMA, however you personally handle things. So let's zoom a little bit faster. It breaks out to all-time highs. It keeps consolidating. It's holding that 21 EMA. Oh, we get a close below the 21 EMA. Depending on your rules, you're selling some or waiting for another bad close, but you still got a pretty good cushion if you bought here, about 20%. So that's a lot to work with. And if you believe in the company, you believe in the fundamentals, the structure, the setup, all that, you could give it a benefit of the doubt. The next day we hold and we continue higher and stair step higher. Here's another bad close. Again, if your sell rule is 2 closes below, you're doing nothing. But if it's 1 close below, you're stopped out with a great trade. But we get a tight day. So again, positive, but direction kind of still to be determined. We start leaking lower. Here you would sell if you're 2 closes below the 21 EMA. And immediately it starts reconfirming higher. So again, you're sold out, but maybe looking for another swing trade opportunity. Maybe that's it from the tight day. And we'll speed this up a little bit because I want to make sure I respect everybody's time. We keep trending above the 21 EMA and act well and see gap ups. And this is good. Okay, so we get another earnings here. So at this point, let's go backwards. We're going into earnings. We've been trending nicely. I prefer when we're basing going into earnings, but if this wasn't too much of a push into earnings, but overall we've been trending above the moving averages. Again, you want to make sure you have enough cushion to hold through if it gaps down, so you're managing risk that way. But we get a gap up. This is another gap up in a stock that's moved incredibly far. So again, you're not necessarily trying to go balls to the wall and really trying to go all in trading an earnings gap. You're just kind of waiting to see and maybe finding a spot if you're a short-term trader. We progress higher here and push higher. This is the HVC that I drew, and I kind of always draw in the close of that earnings day. We're forming a range here. Start to leak lower, holding above the 10 EMA in this level though. Upside reversal off that level, so nothing actually acting fine here. You'd expect it to bounce higher. Tight day on that level, still doing nothing wrong, holding this level. Boom, changing character. So again, if you're entering here or here, you don't have much cushion. Likely you're out as it breaks the 21 EMA or breaks this gap up low. You maybe moved up your stop to that level, but in one bar you're giving back a lot of it. This is down 9%. This is kind of a changing character. There hasn't really been a bar too much like this here. This is also a very bad bar, but it held. But the next day we get further downside. We do push off lows. Try to hold here. Try to hold. We're just tightening. So potentially forming a base here. This would be the base pivot. Further tightening, can't hold, get above that 21 EMA. Forming a base, we're getting close to recent times. So probably you guys are recognizing the price action here. At this point, we've consolidated a little bit. We're forming a tight area. It hasn't managed to push any lower than this. and is holding, this area pretty much. So you can kind of draw in a range. You can see I did it here with these highs and these lows. Here we've got an upside reversal. My expectation would be a breakout here or a breakout attempt. But this bar does give me a little bit of pause. Often you see these types of bars after an earnings gap where it kind of starts the base. So for me, this would be a little bit early and needs a little bit more time to mature the base. Downside reversal, still forming out this overall tight area. Downside reversal, push off lows though. Inside bar. So overall, again, potentially prepped for a range breakout, but overall still forming out this base here below the declining 21 EMA. All right, we get a breakout through the range and through the 21 EMA. Potential short-term, change in character. We'll see if it can progress higher. All right, gap higher and tight close. Overall constructive, looks good. And you've got the 21 EMA now curling under price. You'd expect it to hold that on any weakness. And overall, maybe you'll be watching for an EMA crossback for a potential entry. All right, forming out a range, looks good. Could potentially enter on a push higher. That's what happens through that high, through this high as well, holding that 21 EMA. Nice tight day. After this expansion, could imagine that it could reconfirm even higher. We're moving up the right-hand side of a base now. All right, very tight day inside bar. You really expect it to expand the next day, either to the upside or to the downside. We get expansion to the downside, but it closes strongly. So if you're in it, you're probably shooken out there, but potentially watching for another move because we're basically setting up this pivot up the right-hand side of a now more mature base. We've been basing since this day right here and potentially watching for follow through to the upside. And that's what we get today. So we're now up to recent times. We get a push higher. So now, again, we're trying to see stair steps higher until we test this high and see what happens. If you entered here, stop below the day, you've got a nice cushion, maybe stop a little bit above break even, depending on your entry and time frame and style. But if we fall through up, you definitely will want to move your stop up to break even. But if we form a range here, that would be normal. If we completely reverse and take out this low, that would be a warning sign and probably a signal that this needs a little bit more time to reform. So that's kind of this last bit of price action, almost bar by bar. So hopefully that was helpful to you guys, just kind of sharing my thoughts out loud as we go. So that's pretty much it for the live charts. Any key takeaways from this exercise, which is really good, by the way. Go back through model stocks, go bar by bar. Try not to think about what happened, what happened. Just try to take it bar by bar as is. And think about what your expectation is, where you would put on stuff, where your stop would be. That's crucial. And be honest with yourself if you're stopped out, when you'd be stopped out. Don't just think, all right, I bought here and I'm going to hold until Google moves 5,000% because I know it's going to happen. Be honest with yourself and think about as if it's real trading in real time. All right, let's go back to the slides here to just finish up here. All right, cool. So that was a live walkthrough of this current price action. Again, this opportunity at the right-hand side was the latest really good opportunity. I think the best opportunities for Palantir was this trend, the trend before it back in 2024, the earnings gap up, and then of course the IPO base breakout. Those are the periods to really study. Prior to that, or prior to the 2024 strong move near the end there, it was a little bit choppy. It was tough. I got many stop apps during that period, but Palantir has made a great move since then. So again, the best opportunities I think were that IPO base breakout, the 2023 earnings gap and post gap range breakout. This is probably the best thing to study right here, especially how it pairs with the fundamentals, what was going on with the company, the shift to profitability, the share buyback program that happened shortly thereafter, the launch of a new innovative product, the N factor and Can Slim, the new. So that was really good. And then also the 2025 at the right-hand side that we just went through. And then also a little bit prior to that in 2024 is also a good opportunity to go back and study on your own. Again, the whole point of this is to take lessons from studying history that we can apply to future trades. All right, so again, here are some key concepts. We talked about the 3 opportunity zones at the beginning. If you forget that, that's what we started with. Again, the IPO boom zone, Palantir is a great example of that. And then also the growth transition zone. Palantir is a great example of that as it shifted to profitability and started that more mature trend that we've seen so far. Again, growth transition zone, really big focus today. First time profitability is a big driver to keep an eye on. Always focus on strong IPOs. That's another great takeaway from today. Watch carefully later in their life cycle. If they're strong within their IPO boom phase, they've shown potential. keep an eye out on them and pay special attention when they do set up. That's why I was so focused on Reddit and A-Lab, as you guys saw from the Trade Lab, because they had made really good moves in their IPO. They had characteristics that match the template that we build for potential model books. So that's why I was so focused on them. And new IPOs just have a little bit more potential and can make amazing moves. The post-gap range breakout, that's another key concept for today, especially with that tight day, that priming pattern. So again, go back and rewatch that part of the webinar if you want a refresher on that. Again, here is a kind of the blueprint of the market leader that we're building throughout this webinar series. Liquidity and high ADR percentage, big base and respect for moving averages, explosive fundamental growth, new products, leading theme, high relative strength, RS new highs before price during a correction, earnings gaps, VCPs, and then I added this one today, the start of a new market cycle. We saw Palantir really explode as the market was coming off the lows as well and starting an extended move in and of itself. That's always going to drive and accelerate model book stock moves. So again, in the chat, what would you add to this list? What fits your blueprint of a market leader? Any characteristic that you'd add based on what we talked about today, or based on other studies that you've done? Let's see if anybody has any suggestions to add here. And with that, I think we're pretty much close to the end. So drop in the chat anything you want to add here. And also, what was your key takeaway from today? Which of these concepts did you like the most? Or if you've got something else that you took away from today, let us know in the chat right now. Let's see what your takeaways were. And if you wouldn't mind doing me a favor, let me know some feedback on today's session by scanning the QR code here. Just takes a minute here and helps me know what to improve on and what you found most helpful from today's session. So please go ahead and do that if you found this helpful. And let's see if there's any questions here. Mark says tight stops or swing trading a bit looser for position trading. 100%. It kind of goes down to your style. Three zones and candle by candle study. Nice. Good one. Let's see. Let's hear a few more takeaways, guys. Let me know you guys are still alive and here with me. Everybody should have at least one key takeaway, so drop it in the chat. Like to see momentum near zero on an upside reversal for a low entry. Yep, that helps show the range is tight enough. Double inside bars, nice. RMV the same as so relative measured extension is different. RMV is like tightness of the price action. Extension is extension above a moving average. So those are different things. Bar by analysis, nice. Tight action, momentum shifting from stage one. Inside bars, nice. Perfect. Robert says, I really like the priming pattern. I've never gone down into this detail in charts. Perfect. Well, hopefully you guys will make use of it tonight as you're going through your routines. Base development for IPO. Perfect. IPO bases are great to study. Excellent. Awesome, guys. So please, again, let me know your feedback. Just scan this QR code with your phone, and that would be great. Thank you guys all for tuning in. Hopefully this was helpful to you guys. And I look forward to seeing you guys at the next Trade Lab model stock case studies. So look forward to seeing you there. And thanks again so much for your time. Great questions, great thoughts. Great to see a lot of familiar faces. And we'll see you guys in the next one. Cheers.